I think it's interesting that you say, look, in Japan, things are not as dire as perhaps the markets would think that it is, and also that even the BOJ's own policy would suggest that it is. What makes you, I guess, sound a little bit more bullish when it comes to Japan?
No, my point is simply that the Japanese bad debt deflation problem bottomed out back in 2002, 2003, when the banks were finally cleaned up under the Kazumi administration. Right now, the Japanese labor market is as tight as it was back in 1991, just after the peak of the Japanese bubble. So the simple reality is that the Japanese economy is nothing like as dire as you might think from the high beta nature, the extreme nature of Japanese monetary policy.
But how do you argue that the sort of really entrenched things, the lack of animal spirits, the deflationary mindset that's been there for a number of years, and then just sheer demographics? I mean, how do you, I guess, argue the positive side of these factors?
No, the demographics are clearly a big problem, and that's why Japan's trend growth rate is low. And that's why the Bank of Japan has the wrong inflation target. It should have an inflation target of 1%, not 2%, because it's quite natural to have such slow growth when you've got these demographic issues. So I'm not saying Japan's in a boom. I'm just saying the situation is nothing like as dire as you might think from the nature of the Japanese monetary policy. The other positive point is since the launching of Abenomics, the real estate markets have made good gains, the stock market's made good gains. We see growing evidence of corporate governance reform. So I view the extreme monetary policy as just counterproductive. The lack of interest rates, the inability to make a return on savings, on financial assets just increases risk aversion amongst Japanese savers. Similarly, the abortive effort to do negative rates in Japan this time last year backfired, not only in market terms because the yen went up and the stock market went down, but it also backfired in terms of consumer psychology. Inflation expectations fell with the announcement of negative rates last year. Similarly, extreme yen weakness causes rise in import costs in Japan and therefore makes Japanese consumers more nervous. So all I'm saying is that the monetary policy approach of the BOJ under its current leadership has been completely counterproductive.
Chris, I think it's been baffling a lot of people what to make of this reflation trade and where it goes from here, what it's actually based on, or is it happening in spite of, as opposed to because of the Trump election victory? Am I correct in saying that your view is that we've seen this pickup in sentiment, but it hasn't yet fed through into actual investment?
Well, no, but I think definitely the election of Donald Trump triggered a reflation trade and a bond riot. In many respects, I think that made a lot of sense because there are these aggressive policy proposals for aggressive tax cuts, fiscal stimulus. But I think the interesting point right now, which markets are wondering about, and I'm wondering about, is whether the Trump administration is going to support this border tax proposal, which is in the House of Representatives, which would amount to the most dramatic U.S. corporate tax reform for decades, and would have big implications both for the U.S. and the global economy. If a Trump administration does support this border tax adjustment proposal, it will create expectations in the markets of an investment cycle in the U.S., most particularly if it's accompanied with a proposal on the corporate tax amnesty he's been talking about to try and get this $2.5 trillion offshore return, corporate cash offshore return to America. My guess is if he does the corporate tax amnesty, there'll be a quid pro quo, i.e. you only get the tax break if you agree to invest in America. So an environment where such policies are announced or the market thinks such policies are going to happen, I would expect the US dollar to rally again and the US bond market to sell off again. And in that environment, actually, the Japanese equity market will do very well because in that environment, the yen will weaken because of the US Treasury bond market selling off. The BOJ is currently trying to fix the 10-year JGB yield at around 0. So in that environment, the yen sells off and Japanese financial stocks rally, and you make a lot of money being long Japanese financial stocks, short the yen. But all that's a lot of ifs. What we need to find out right now is Donald Trump's administration going to go with this border tax proposal, or is it not? Obviously, Trump also wants to do aggressive tax cuts. However, in my view, he's most likely to get the support. He's most likely to get the support of the Republicans in Congress for his aggressive tax cuts if he supports their border tax reform, because the border tax reform will create an offsetting revenue. If he does not support their border tax reform, I think he's less likely to get their support for his tax cuts. So I think the two are connected.